Hi, folks. This is Sean Hyman, editor of Currency Cross Trader, and I just want to talk to you about a concept that really a lot of people, I think, have the wrong view of. Here we are on Fed Day, FOMC Day. The Fed released in the interest rate decision and their thoughts about where the economy is heading and going and what's been going on in it. And so, looking at euro dollar chart, 5 minute chart, so definitely a near term chart to see near term activity. And a lot of people see a lot of opportunity in the news event trading, trading the news. And there is, a way to do that. You got to be nimble and you got to be savvy and you got to be pretty experienced, or you got to follow somebody who is, such as my buddy TG. He's really good at it. He runs a day trading show and is good at it. But those are few and far between. So if you're not one of those, you definitely do want to follow somebody like that. But here's my point. If you're not one of those and you're not willing to follow one of those like TG, I would suggest not trading news event trading. News event trading is very sporadic, volatile, very back and forth. But look at before the Fed announced interest rates, look at this, this nice uptrend that was produced. Would you have rather been trading that or this, this craziness right in here that was both back and forth, back and forth, back and forth, and was trendless at the time, and then, made it look like a trend was broken and then the trend was recaptured and all this kind of stuff? Or would you rather have the consistency of the uptrend in euro dollar that led up to before the announcement, or even before that, the nice downtrend that was happening before that as well? So there was more of a consistent pattern, a trend that was easier to follow here, here, and here. And then you get to the Fed announcement, man, you get all this gobbledygook here, which is really rough and choppy and tough to trade. So the mainstream thought is there's so much opportunity in news event trading. And for the right person, which is a small percentage of all traders, that may be correct. But for the bulk of traders that don't follow a pro and are doing this on their own, you're statistically you're a lot better. You have a lot better chance in following times like these where you've got a distinct trend that's been going for a while, a downtrend or uptrend, doesn't matter, because you can short and buy in the Forex market just as easy either way than it is in these volatile, choppy periods like this. So consider that when you're being tempted to fall into the news event trader trap. Just know what you're biting off before you get into that, and realize there's tons of opportunity in the times where you're not talking a major news event like U.S. interest rates or non-farm payrolls or things of that sort. So I would encourage you to trade the times before and leading up to the events, whether it's NFP, non-farm payrolls, U.S. employment report, or whether it's U.S. interest rate decision. I would encourage you to trade the day and a half, whatever, before all that, and then be out of your trades and make your last entry to where you can be out of the trade fully before the news announcement hits. Because after the news announcement, man, all bets are off, and it could go all over the place, and usually does. And that is much more sporadic, much more unpredictable, and a lot tougher to trade. And requires a lot bigger skill and expertise and tenure than does trading the times that were before it, and look at all the opportunity that was there. So you could have traded all this downtrend or all this uptrend and look at all that opportunity, or you could have tried to made out in this little bit of choppiness here, which likely stopped a lot of people out and caught a lot of people on the wrong side of the market. So thanks so much for watching, and if you'd like to find out more about my videos, just click on the link below, and we'd be happy to share more information with you. Thanks so much for watching. Bye-bye.